Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today what we're going to talk about is probably one of the biggest mistakes that traders make. And the terminology I've been using for this, which is called chasing price. And I see this really often, especially with new traders that come into the boot camp, where they're running pre-market scanners and they're looking to see the biggest percent gainers yesterday or the biggest percent gainers today. Now that's not bad, especially biggest percent gainers if you're actively day trading and you really like to be involved in those stocks that just happen to be going up right now. However, what we want to talk about is something very important. And we get a lot of questions about order flow, which is the core of what we do in the boot camp. Which, by the way, if you want to trade with me in real time for the next 30 days, definitely click down and learn about the boot camp. You get everything. We kind of help you shortcut the process by getting my entries, my exits, my stop losses, my profit targets on every single trade that we do. And then eventually you get to the point where you're like, oh, I know what I'm doing. And then you actually go and find your own trades, and we talk about those as well. But in the meantime, here's the problem that I see. Our job is to piggyback the smart money. Our job is to find an idea that's so obvious and has obvious institutional support. Now, if you go back, you look at any classic text on trading, and I think most people nowadays probably look at William O'Neill's How to Make Money in Stocks. He's kind of a growth investor versus Warren Buffett is a value investor. William O'Neill is looking for the next quarter and the next quarter and year over year to confirm what we're seeing on the current quarters, right? So it's more growth and faster moving opportunities. You know, it's buying high and selling higher. The opposite of value investing is where you're kind of finding, undervalued stocks that you anticipate the market correcting and getting back to a certain number. So here's the point that I want to get. We're actually going to go over to the screen in a second. I'm going to do a very quick scan on FinViz just to get your mind going and to start setting stuff up. So if you think about what order flow is smart money placing orders, right? That's the actual order flow. So when big institutions have orders, they're sending them to market makers, they're sending them to specialists, they're sending them to the broker. And the people on the other side of those orders, they get paid for order flow. So if I have 1 million shares, you have 1 million shares, you send it to your broker or specialist or whoever happens to be filling the order. You're not going to tell them you have 1 million shares, but you know you have 1 million, right? Or 5 million, whatever share amount you have. When you send those orders to them and they work the order in the market, they try and get the best price within the market. The better job you do on those orders, the more order flow I'm going to give you, and you're going to make more commissions off of my order flow. So that's how that whole cycle works. So the order flow are these large institutional orders, the large deep pockets that work orders over time. They're buying and selling positions over time. And here's where the mistake comes in. And this, you could fix it like this. Traders that are simply looking for percent gains yesterday. Yes, while they're good active trades. Yes, while they are something to pull up on your screen if you're interested in getting in and out. I'm a little bit more, I like to trade in a relaxed way where I'm looking for the trade over the next 2 days to 10 days to 2 weeks. I absolutely day trade and we take some pockets of opportunity intraday, but we're still looking at trades that have a little bit longer term order flow. They're more established in the sense that by looking at the tape, by reading the order flow, by reading the tape, you're identifying trading opportunities that have significant commitments by deep pockets. And when I say significant commitments, I'm not talking about yesterday stocks on the big percent gainers. That's 1 day of order flow. That's 1 day of commitment. So what you want to start to do, if you really want to start digging into this and feeling conviction when you're placing trades. Now remember, conviction does not come from predicting what's going to happen next. Predicting in the sense of trading, where you have conviction in your ideas. And we've been talking about that and calling it trade expectation. Trade expectation comes from the belief based on building an argument, which we do with order flow and tape reading. Belief in the fact that you've spotted a stock that over time, and for us, it's generally the quarter, the month, and the week, over time, you see a pattern where smart money, deep pockets, sending order flow and creating higher highs and higher lows from one day to the next week to the next month, and they're closing on the highs. So it's not just the one day, which actually kind of brings me back to another comment or question or conversation that we recently had in the boot camp, which was we were looking to buy a stock that was pulling back for a couple of days. And immediately I knew that was a new trader, somebody who wasn't really familiar with order flow. And the question was, why are we buying the stock if it's going down? And it's a valid question, especially for somebody who's new. But here's the thing. We weren't buying the stock in the context of it going down the last 2 days. We were buying the stock in the context that there were order flow, obvious order flow over the last 2 weeks and the last month and a half. So we're buying the commitment of that order flow over time. And that's, think about it. If you push the stock, or if a stock went from 20 to 35, that's a commitment in order flow. Somebody with deep pockets had to push that. We're looking for that. And then obviously the next step is we're taking it deeper at what happens between the right price, between entry and exit, and setting up the right risk reward and actually earning that risk reward. So if you're looking at a stock and you see it going down, or if you see it going up, you're not really buying that to have conviction. You're not really buying that immediate price action. What you're looking to do is find the deep pockets who are building a position in that stock. And that's where conviction comes from. That's where follow through comes from. You know why? Because it's already happening. It's already in the stock. The fact that you recognized order flow tells you it's already happening. Stop trying to bottom pick. Stop trying to top pick. Just look for something that already has a good tape, and then just hop on board, learn how to piggyback those kind of moves. So I'm going to go over to the charts just really quickly. We're going to use FinViz. This is the scanner that I use for virtually everything. I happen to have the elite version, which is $35 a month, but you can do everything I'm about to show you in the free version. So this is kind of like a scan over time, looking for order flow that kind of drills down into some ideas. Okay. So we're going to head on over to FinViz, and I'm going to walk you first through what is my minimum criteria. So I actually have that as my template, and you'll notice in my template, click the wrong button there. In my template here is I'm looking for stocks over $15, but this is really more the criteria. I'm not looking for ETFs, it's stocks only. Average true range of at least $1.50. So that's the volatility in the stock, and average volume over the last 30 days of at least 2 million. This gives me volatility and opportunity. Okay. And that brings up 299 stocks. Now, the big thing I want to look at here is performance. Now, what I'm going to do is I'm going to break it down, and you start to see a pattern. You start to notice stocks. Now, you could export them. You could just start to create a list. But what I want to do now is we're going to look at performance over the last, and we'll just really drill it down a little bit further here, over the last month of 20%. Drop that down dramatically, right? So that's over the last 21 days, we went from 229 stocks down to 64 stocks. Now we're going to drill it down even further, and we're going to look down to the last week. And we're just going to say the last week was up 10%. So now we just went from 229 stocks all the way down to 34 stocks. Now you start to drill into these leaders of the stocks in the right sectors. And now you start to see clues is probably the best way to word it. Now, if we drill this in by sector, now you start to notice, and you break those 34 stocks down into where you can see some market leaders are where your eyeball should be, and where you now go in deeper into these stocks, and you start to look for how long these stocks have been producing good ideas. This is really just scratching the surface of what to do. I just wanted to start to get your wheels turning in a way that, we kind of talk in the boot camp where I get it. A lot of traders are kind of like looking for that, what we call the diamond in the rough, the penny stock that can go from $1 to 50, or, whatever the dollar amount is. I get it. I understand why people do that. It's not what I do. I like to trade conservatively, where I'm looking for the strongest sectors, the strongest industry groups within those sectors on a week by week basis, on a month by month basis, on a quarter by quarter basis, and just keep tracking it every week and see where is the smart money going from day to day and week to week and over time. And you start to see clues of which of the trades are the most obvious. And then those are the ones that you focus on. Again, the last part is understanding how to read the tape to buy it at the right time. And then there's the part after that, which is actually managing between entry and exit, setting the right profit targets, and then actually earning that profit target. So this is just a start to a much bigger conversation. If you find these videos helpful, definitely click to subscribe so you get updates. Give us a thumbs up if you thought this was helpful, at least got you started. And if you have any questions about this particular method or strategy or way of looking at the market, I'd love to hear from you. Leave a comment down below the video and I'll get back to you as soon as I can. Have a great day, everyone.